This is the most important confluence that you can implement to any trading setup that will make it 30 to 40% better. No cap. This is Mohan from Mohan Trading, and in today's video I'll go over this liquidity confluence and some examples. I guarantee you will not get out of this video without getting significantly better. If you like this type of content, hit the like button, subscribe to the channel, and join my free Discord, link in the description. Let's dive in. Before getting to the video, I would like to announce that I have partnered with Bespoke Giveaway, which I found it offers one of the best tools nowadays to give away 325,000 accounts to 3 of my subscribers. To get in the giveaway, you need to do the following. 1. Subscribe to my channel. 2. Follow me on Twitter. 3. Follow Bespoke official account on Twitter. And finally 4. Leave a comment under my last video with your Twitter account. And I'll announce the winners next Monday, May 1st. Okay, I'll make it as easy as I can. So let's assume this is the current time. This is now. Okay? What I want to see to the left, just before this time, I want to see a low resistance liquidity condition building up. If you don't know what is a low resistance liquidity, then you need to watch my last video. I went over this in a very simple way and advanced way. You need to watch that video now before continuing here. So, this is the low resistance liquidity right here. Whatever your setup is going to end up with a POI, with the zone that you'll enter the trade from. Either a sweep, either waiting for a confirmation in a higher time frame POI, or either same time frame POI. It all doesn't matter. You'll end up with a POI, right? So, let's assume there is a POI here. Okay, so this is the POI. What I want to see first is this. So now we have the low resistance. So low resistance liquidity condition here. That's before the current time. And this is going to be our target. Okay. So before, this is our target. We all know this. Now, price will come to the POI. But before coming to the POI, if price comes this way, I'm not going to enter. I'm going to wait for something. I want price to give me this type of thing, a liquidity. Let's say here, I want to see price giving me this type of liquidity, either a swing low or equal lows just before reaching it, and then price goes up. Now this is going to be a higher probability setup by 30 to 40%. Most of the time, when we have a liquidity here, just what price is going to do is come back, take the liquidity, those equal lows, take them, and then bounce from here, goes up, and then takes the low resistance liquidity. So basically, you want to see a low resistance liquidity condition just before the current time, and then for a bullish example, you want to see a liquidity just above the POI, and for a bearish example, you want to see a liquidity just below your POI. Now, for whatever reason, you enter here on the POI, and then your stop loss is below the POI, and you'll always start getting the low resistance liquidity. So we all know how equal lows act like a magnet. You see price took them, and most likely price will react from the nearest point of interest to the equal lows. This is the nearest POI to the equal lows. Price will react from here, goes up and take the low resistance liquidity. That's all. That's all. You can apply this to any trading setup, and you will be able to improve the win rate a lot. So for the first example, I would like to cover a trade that I entered yesterday. It was on Friday, April 21st. Basically, what I saw here is, first of all, this order block here, but then I took the balance price range from here to here. This is the balance price range, and it was not mitigated, so I was positive about this balance price range, but then I want to see a lower resistance liquidity. Where is it? We have this high here, this high here, high here, high. This is the lower resistance. So this is similar to a trend line liquidity. So we can see trend line liquidity. And then this low was swept. So if this low was not swept and it's giving me an equal low, this is going to be much more higher probability setup. But it was still a high probability setup for me. And I entered because this for me is an inducement, even though it's with this one, but it did not mitigate like this balance price change, which I was pretty sure it's going to mitigate. So basically, I was targeting this. I was entering from somewhere in here. I also used Fibonacci retracement. So if I use Fibonacci from here to the bottom here, you can see that the the low of the balance price range is the 79%. So that's where I entered, somewhere in here, and then stop loss just below here, targeting this high of the low resistant liquidity, which lines up with the equal highs here, which is a very nice thing. So as we said in the previous video, if we have equal highs aligning with the low resistance liquidity, that's when we know those equal highs will be taken. So I entered somewhere in here, right here, and this was a trade. I could have gone for this high, but then this was my first target right here. Just a 2.7 trade, that's it. And that's what happened. Price come here and then immediately go on. I mean, it did not take profit, 0.8 pip, less than 1 pip, and then this is what happened after that. It goes up and then almost takes the high here. That was a nice trade. So this was our first example. Just after that, let's say this is 4 a.m. and then this is 8 a.m. So 4 hours after, we can see that there was a low resistance liquidity building up. We have this low here, a lot of lows here not broken, and then we have this low and this low. But to make it easy for you, you can cancel this because there was a sweep here, and a lot of people will be confused between high resistance and low resistance liquidity. I'll just take those, so this low and this low. Now, if I zoom out, what I can see is there is a major high here, and this high, you can see that this high was swept here. See, this is aligning with the high. The high was swept here. So now you can look for an entry here, especially that we have a low resistance liquidity here. You can target those, and you can look for an entry. Either go with a risky entry, you enter after a sweep, or you wait for a change of character and then an order block. So let's see what happened. I'd like to see this pullback broken as a change of character, which happened here. And then I do have this small fair value gap, very small one. So what you can do is you enter from this more fair value gap. There is no point for a price to go up here as all the liquidity is already taken. So now the logical thing is we wait for a price to come to this fair value gap. And we have a liquidity here. So now price will come here. You can go stop loss just above this high and then targeting this low resistance liquidity. So it's right here. This is the liquidity and this is our target. Target this low here. And let's see what happened. So price trigger the entry and then go down. Price break the first swing low here, which is a good thing. And then price goes up and then comes back to the entry. There's only one reason that you should hold this trade. What is it? The low resistance liquidity right here plus more liquidity. See those equal lows here? This is an important reason to hold the trade. what happened next is price go down, takes this liquidity, this liquidity, and this liquidity, all of them at once in 1 minute. This is a 1 minute candle. Takes all of those at once. And then what happened after? Price keeps going down. This also can be applicable on the higher time frame. So let's say 4 hours. We can clearly see this low resistance liquidity right here. It's building clearly. So now we go and look for POI. So now clearly we can see this fair value gap, the extreme fair value gap here. And it is the extreme one after a liquidity sweep here, which is very high probability fair value gap. But also we have this balanced price range with another balanced price range too, which is this one. So basically we have two high probability POI, both of those. Now we're gonna wait for one of those to be touched, and then we're gonna go to the lower time frame and take an entry from there, or you can enter from each of them and then have your stop loss here, or take both of them half risk. If the first one hit your stop loss, the second one will for sure work. So it all depends on your trading style. So let's see what's gonna happen. Price comes down, comes to the first POI, and then let me go to the 5 minutes, for example, just to see if there was a setup. So this is a valid change of character, as this high was broken, the last previous high was broken, and then the low was broken. So this is a valid change of character. So now this is a change of character. There's a fair value gap here, this one. So if you're trading with a lower time frame entry, you can enter here and then stop loss just below this swing low. This is too risky, by the way. And then you target, say, this high right here. I mean, if we look at the bigger picture, let's just switch back to the 4 hours. This is nothing. See, this is only here, but this is still 7 to 1. But if you're entering on the 5 minutes with this tight stop loss, it's so hard for you to take all of those take profits. Like it's not logical. But then let's say you enter on the same time frame, let's say on this bullish candle, for example, and then stop loss just below it, right here, then targeting all of this. This is now making sense. But let's say you enter in the 5 minutes now. Okay, so back to the 5 minutes. I want to see what price did. You can see that price came back to the fair value gap. You see, did not close below the fair value gap and go above from there. Switching back to the 4 hours just to make life faster. What's gonna happen is this. Price will go up, take the first high, goes up immediately, takes the second high. See how fast it is? Like there is no bearish candle except 1, 2, 3, and 4. Only 4 bearish candles in this movement. This is how low resistance liquidity help you. Even a swing trade will take much less time with the use of low resistance liquidity. That's all for today's video. I hope you like it. I'll see you in the next video.